Welcome to the Chewn podcast, where real topics are discussed by fake individuals with fake opinions. Even if it's the host or the guest, don't take them seriously. And if you do get offended, guess what? Shit happens. Leave it below in the comment section. Let's roll. What's going on, good people? We're here, the Chewing the Fat podcast. I got my brother, Sir Dan DeVille. I got a special guest today, but I'm going to bring him in a little bit different. You know what I'm saying? I'm going to bring in Mr. Success Don't Impress Me, the founder, along with host Jolene the Queen, about our ancestors had labored enough. The Come Up Series King is here, the myth, the legend, Mr. Mark Monroe. How you doing, my brother?
I'm doing well. Thank you for having me.
No problem, man. Thank you for being here, bro. We got some things we need to talk about because some of our people are a little bit in need of some enlightenment when it comes to how they're going to do certain things. But before we do get started, I'm going to let you people know something. This is not a financial advisory. Mark is not here to tell you what to do with your money, where to put your money, who to invest in, or any of that. And you already heard the intro. Everything you hear is nonfiction, and none of us are real. The advice is not real. It's for you to develop your own acumen of investing and go do that on your own. So don't bring us no lawsuits and shit, because we're not doing none of that. All right? It's all imaginary.
It's all a dream.
So
Never
for real.
happened.
So Mark, just so people get an idea that may come into this video and not have an idea who you are. I've known who you are since about 2019 time frame. But just if you could just give them a glimpse about what you're about, what your platform's about, and what you stand for.
Yeah, so I'll reverse engineer it. So I stand for all things honest, integrous, and of course, culture. What is it that I've done over these past, let's say half a decade or a little bit past half a decade, is I helped start this movement called the Come Up Series, where we wanted to bring financial literacy, and not just the literacy part, but also put things into action. So helping people that look like each and every single one of us literally excel in the markets and understand not only just from an investment side, a trading side, economic side, as well as a business side. And that's really been our thing, to try to close the racial wealth gap within one generation, which when you think about it, generation represents what, 10, 15 years. So, really trying to see exactly if we can help change the trajectory of the lives of the people with great information, honesty, as well as authenticity of just good knowledge. So that's been our focus.
Bow to thou. There we go, and it's very valuable. So I'm gonna drop us right in, because I think right now we have what I would call a new group of spawning investors come every time the market hits a cycle where everything's uptrend. Correct? Yep. You got social media pumping this. You got people with all types of outlets pumping this and saying what you can get. Yep. So when it comes to these claims, make a millionaire, we're going to short this, we're going to go into these options, these puts, these calls, and people don't really ever have a true understanding of what they're getting into. So what would you do if you had not had the knowledge of investment and you were coming into this and looking back at your previous self? What would you tell your previous self now if you were getting in to look out for? How would you scale into this type of market?
So first things first, I started this journey when I was 9 years old. So for me, when I came into the markets, I was 9, very different. This was back in the time when if you wanted to look at tickers, you had to go to the business section and you had to find your ticker in the newspaper.
God damn, bro. He an OG
I'm
in the
straight
streets.
up OG. So when I tell people that I'm real and true to this, look, that's where I started.
Right.
And so, it first always starts off with education. Now, the beautiful thing about the education is the fact that the information is so widely, massively available to everybody. But then it's just more so in the sense of looking at what does your information diet look like. So, really taking a look at, where you're getting the insight from, where you're getting the knowledge from. And for me, I started directly from companies themselves. And, the beautiful thing about it is if you want to know about what a company's doing, just check their report card every quarter. And so, is it something that you can participate in? As an investor, there's never not a time to participate in a market. Now, what you mentioned as it
Okay.
pertains to options trading is a whole different type of investment vehicle that's a lot more risk involved. I would say that that's a whole different type
Right.
of special sport that I would probably say, like, if I had to compare it, if I had to compare the two, investing would be like the marathon runners that we see, like that, where it's typically dominated by the Kenyans that literally dominate through the Olympics. And I would say
Right.
trading would be, say, for example, your sprinters all the way up from 100 meters to 400-meter hurdles. We're not running the same races here.
Boom. Not at all.
um,
We ain't even built the
I've got a
same.
yeah,
question. Um, Question
yeah,
for you, brother, on the investment side. Something that I run across a lot. A lot of my clients, I work on the commercial
okay,
insurance side, but a lot of them on the smaller business side, they ask about investment. What should I
yep.
invest in? Should I jump into Amazon? Should I do what's the hot thing? And oftentimes, and I may be wrong, but my advice to them is invest in what you spend your money on what you buy and what you do. That's the best advice I've been able to give them, as opposed to telling them, "Hey, jump on the bandwagon that's going." But what would be a good piece of advice for a small business owner, to invest and get into the
Invest in
market?
things that would.
You know, it's funny you say that. Before you
Go
get
ahead.
started, Mark, before you get, I know, I remember, and I can't quote it exactly, but Mark,
Yep.
years ago, one of his talks was, it was around the Apple
Yep.
situation. And it was like, if you got an Apple phone, you got earbuds, you got a tablet, you got an iPad, you got an Apple Watch, why wouldn't you invest in something that you're putting your money in so you can get a kickback? I
Right.
do
I
remember
did
you
say
saying that
that.
years ago, Mark, but go ahead.
I was gonna say,
Yeah.
I was
Okay.
gonna say, so
Okay.
that was the second part, but so you've already taken the first part, so dope.
Okay.
Invest in things in which that like literally have impacts already within your lives, because if it has an impact in your life or even impact in your business, if you're making massive business expenses, like to buy MacBooks
Right.
and stuff like that, or any other type of tech, then 9 times out of 10 other people are. And then on top of that, invest in things in which that dominate and dictate the spaces. So like, the
Can you expound
yeah,
on that a
like the
bit?
biggest thing is like, think about it like when it comes to picking investments, think about it like you're playing pickup. The first people that get picked are the winners, or the folks in whom which said like, okay, hey,
Right.
like it's a certain pedigree, like as it pertains to
Right.
like we've all played
Now,
pickup basketball. You're gonna go for who are the ones that
Yeah.
that they're gonna
the players.
Them
the
ballers.
ballers that that
Right.
they're gonna go. You see what they do. And
That's
so
right.
Right.
naturally, that's how you should be picking companies to be
Okay.
added into your portfolio. Your portfolio is a lot like a lineup. And so you lead with your winners first. And then, of course, so your winners dictate the top. So that, like, if we say if you had your top five, your top three would be
Right.
dictated by the winners. So that's the
Right.
top three. The final two, you would have one that you would say, okay, hey, they're creeping up in the space, so they're starting to show that, okay, hey, that there's signs of more growth. And then you would
Okay.
have that one that's like, okay, it's potentially speculation. We don't know where it could be because it's very new to the market. So I'll break it down
Okay.
for you. So I would say if I had to give you a top five, I would probably say I would go with Apple. I would go with it. I'm a tech. I'll keep it keep it simple for everybody. So I would go with Apple.
Okay. All
I
right.
would go with Microsoft, and then I would also go with Amazon. I would say, for
Okay.
example, I would choose Nvidia as a company that's still an up and comer, though. Go figure, they have the largest market cap right now. But and then another company that I would choose as a sleeper company would be, say, for example, a Figma. And
Okay.
so the reason why, and I'll give you a quick breakdown of all those. The first three dominate and
Okay.
dictate space. So there's nobody out there,
Okay.
like if you think about like all the apps in which that are being developed, 9 times out of 10, they're on the App Store.
You got
And
it.
then on top of that, if you notice the top three that I just picked, they all guarantee bringing in revenue of $100 billion every 3 quarters or every quarter. The next one that I just mentioned is a company that you're seeing that their revenues are growing. And so essentially, it's like, okay, hey, it's still early in the game for the space as it pertains to AI. But at the same token, when you
Right.
think about AI, you can't think of AI and not have NVIDIA's name attached to it. Okay,
Exactly.
the final
Exactly.
company that I mentioned was Figma, which is being used
Figma.
across pretty much if anybody does UI UX design, 9 times out of 10 they use Figma
Okay.
to design a product or create anything that's within design. Now, the reason why I put them as the top 5, and it can fluctuate as it pertains to who that 5th pick is, but it's just more so in the sense that if I'm looking at potential upside over a period of time, since they're new to the market,
Okay.
I like that.
So we're gonna, and that same strategy, you know, for the folks that's listening, that same strategy can be applied. Pick top 5 on whoever you are, right?
You're muted.
Jay. Oh,
I
there you go.
gotta put Mark on point real quick because you named your top 5 that you was gonna pick, right?
Okay.
Who's the motherfucker left on the wall that nobody picked? Because it's always somebody that ain't get picked. Who is it? Yes.
I'm gonna make a controversial one. I'm gonna say Palantir.
Oh.
I'm gonna say Palantir.
Okay.
And the reason why is because, like, you know, they're like the person, like, you see them making a few shots, but when it comes down to it, like, and when I say, like, when it gets a little turbulent during the game, let's put it into the context of the market. So what I mean by, if you're playing turbulence in basketball, right, like, things can happen. Somebody's going on a run. You need somebody that can stop the bleeding. They're not that person that's going to do that. And what I mean by that as it pertains to when the market changes, and we're probably going to have a downturn within the economics of this market coming soon. You're going to ask yourself, okay, hey, can they go out there and get a bucket on their own? Or are they going to be relying on the United States government and other governments to have that spent?
Wow. Good drop. Go ahead, sip some water on that. Sip some water on that. He goes sip a little water on that. Get that essential.
Stay hydrated, guys. Stay hydrated.
Gotta stay hydrated. Oh, okay. So let's look at a different because I want to check out a few different perspectives as this comes into different people. And I'm going to use myself for an example because my brother Dan knows at this point in time in my life I've went through a lot. And it was when I had got into this, I had a bad taste in my mouth, built up my portfolio. Had watched several of your videos. Definitely out of many resources out there, I just felt like you probably were the better source.
Thank you.
Right? You just seemed more solid to me. You seemed more real about it. You seemed more adamant about really helping people as a communal level come up and uplift. It wasn't about, hey, we got a book club, we got a movie club, we gonna be here, we gonna be there. Mark was like, listen, the main thing is the main thing. I need my people to come up. He like the Black Panther of the investment space. You feel me? So that's how I felt. And matter of fact, man, I might have to change that. You might be like the Killmonger because people think Killmonger's a villain, but actually Killmonger's like, yo, by any means necessary, I need my people to have just right, just do, and everything that they need to have to get up out of here. So really, I'm a crown you on that.
I'll take it.
I'm glad, brother, because some people take that disrespect as really respect given because you come about on that approach. But I had a situation that I didn't know about when I enabled options on my account. I was ignorant to the fact that also margins were enabled.
Yeah.
So while I'm sitting there investing and buying, I'm out of town one time and I get hit with a margin call. I'm like, what's a margin call, right? So I'm out of town. I ain't got time. I'm gonna pay it. $950. Pay it. Got hit with another one, $1,250. So I pay it. So by the time I got back into town, I've already spent close to $3,000 on these margin calls. So I'm calling up like, hey, I'm getting hit with these calls. What's going on? And then they let me know it's margins. And so I'm gonna explain that to me. So in layman's term for me, Mark can expound upon it when I finish saying what I got to say because I just feel my situation might also be other people's situation. I'm not ashamed to share it. It was basically to me came where they're involving their money with my money. So basically I was borrowing money when I was buying my securities and over time interest called, especially on the downslope. So long story short, I asked, how do I get rid of this? And they said you have to pay the movie. I was like, I don't care. I want to close this. I want to go to an all cash account. I didn't even know that was happening. It cost me over $20,000 to get their hands out of my pocket.
Really?
It was $20,000. Yes, bro. By the time I had spent the $3,000, bro, it was crazy. So I paid. I said I paid it. I don't want to have nothing to do with you all. Well, just on the other side of that, I ended up having a couple of surgeries. So then I'm out of work. I'm using my money to make sure I paid bills, take care of the house as a man, do all the things. So now my account is like heavily impacted. How would one go about after having an experience like that, go about trying to build yourself back up to try to get back to where you came from? Because I had
Good question.
substantial size to me. You know
Good
what I'm
question. So for the folks that are like, watching or listening wherever you are, the best way that I can like put it as it pertains to margin is a lot of times they put margin in accounts because of the fact that if you're doing high frequency trading positions. So like, let's say that I do a position here and then I sell it and then I do another position. Margin is that thing where like you naturally, when your cash isn't settled, because naturally you have to wait till midnight for the cash to settle over in the account. And so margin, what happens is that they'll give you, say, for example, a balance that's naturally like the reflective balance of your account, but that's on credit. And essentially it's saying that, okay, hey, if the account, like let's say you're looking to go into your next trade or whatever it is, then essentially, hey, you have to make sure that essentially that the cash is in the account. So then that way it's like, okay, hey, no harm, no foul. There's no interest that you pay on it. But when the cash settles, then the balance is ultimately restored. Now, a lot of times where other folks get margin called is let's say that you're in a trade, and let's say that either the trade is going in the opposite direction in which that you're looking at for the time being, then the brokerage will say, okay, hey, well, you need to settle this balance. And naturally what they have a requirement is, I think it's at least $25,000 to be sitting in your balance as it pertains to your account for you to trade on margin. Personally, I always tell people, like, if you're getting started, don't start with a margin account. Start with a cash-based sweeps account, which means that essentially it's just cash-based. So whatever cash that you have there, what's in the account, that's what you trade. And then essentially as you work yourself up to, like, let's say more high-frequency trading, that's when margin can really benefit. So naturally your pattern day traders, people who trade like 3 to 4 times a week, that's naturally what they're using. To build yourself back up, right? Like, because here's the thing, I always ask people when they ask me that question, I always turn it back and say, hey, do you want to be rich or do you want to be wealthy? Because they're not the same. So if you're looking to be rich, like, like you can do X amount of high frequency trading, but it's also going to come at a risk. If you want to be wealthy, it's just going to be that slow. It's going to feel like that slow grind, but over a period of time, it's going to naturally climb up. So that's why I created that strategy, if you remember, called the rolling fours, because it kind of gave you a healthy balance as it pertains to if you're an options trader, but you don't like, if your blood pressure isn't set up for doing high frequency trading and everything else, I set it up so that way, essentially, you can literally like set a specific target within a trade and essentially just trade it on the long term without having to worry about all the short term, hoopla.
Shenanigans.
And so essentially it allows you to sleep better at night. A lot of folks still watch their portfolio and everything else, but then essentially you're just doing it on a year over year basis to keep it simple for yourself. Now, does it still suffer the same thing as most option traders face? Yes. I mean, if the market goes the opposite direction, you still have to have a trading plan in which that you say, okay, hey, I'm stepping out. But I would say that's the best plan that I've seen so far. And if anybody comes out with a better plan, that's fine. I'm always down with it. But honestly, the rolling four strategy, I think, is probably just unbeatable because essentially you're doing 4 trades a year, either on a 1 to 2 year option trade expiration basis. And essentially you're letting it cook, getting to a specific target or a specific return, and then essentially you cash out. And then it's a rinse and repeat strategy over, let's say, 4 to 5 years.
That thing be marinating. Dan, are you familiar with the rolling fours concept?
He's like, I'm not familiar with your game, Mark. He was like, put us on.
Right.
That's okay. That's okay. Do you want me to
No,
break it down?
that's what I want. Yeah, I do, because I want my brother to understand what's going on and the people to understand. And listen, y'all, this is going to be a glimpse, but you can always go to Mark IG, his YouTube, him, Jolin. They always go in depth in these things. But go ahead and give them a synopsis so they can kind of understand where that comes from, because it is an awesome plan.
So the rolling four strategy is something that I started off with, like when I started moving over from being a high frequency trader. And I wanted to, my world is tech, finance, economics. Those are my 3 arenas. That's how I roll. So essentially, when I was going back into entrepreneurship mode as a tech founder, I still wanted to trade because I started trading technically my freshman year in college. I'm going to date myself by saying that I started my freshman year in 2004 at Tuskegee. Um, so that way
Let's
you can do the
go.
numbers and do the math as it pertains to understanding how old I was and how old I am today. But I started, and so I started the rolling four strategy probably around 2012, 2013. And the strategy is very simple. I'm literally going to trade 4 times a year. And I'm literally going to, instead of doing these option trades that expire on a weekly or, monthly basis, I'm going to buy options that expire either a year, roughly it's either 9 months, a year, or a 2-year option call or put, whatever it is.
Okay.
And essentially, when I reach a specific target that I'm literally striving for, I'm going to sell the position. I'm just literally going to cash out. You don't lose money taking profit. So ultimately, when I reach a place in which that I'm comfortable and profitable with, I sell it. And then essentially I'll wait for my next, and I'll keep adding cash to the portfolio. And essentially, probably around the time of next year, I'm probably unloading 2 trades or maybe even 3 trades, and I'm going into more trades. And if you do that over a 4 to 5 year span, if you start off with any number, and then let's say if you set yourself and say, because options naturally have a range of profitability between, I would say, depending on the market. If you're in an uber bullish market, then you're getting like triple digit returns from anywhere from like 100 to roughly like 300%. In a mixed market, you're getting anywhere from like, let's say 75 to roughly 150%. And in a terrible market, it's trash. But in the average market, you're probably ranging about 75 to 150%. So let's take the median. So you're saying that if your trades in a perfect world, each trade nets, let's say, 100% return. And let's just say like you did 4 trades, of each trade is like 5,000 a piece, and do that over a 4-year trajectory.
The shape, and that makes sense too, brother, because quite a few of the people that I've talked to, they jumped out, man, talking about playing options and talking about making plays. You know what I'm saying? You hear this all the time, making plays. And brother, every story I've heard from it never ended well. Oh yeah, I heard this. I was gonna jump out and I put $500 on this. Lost everything. So brother, I love the way that you just really laid out the structure and gave an education to the people so they don't jump out there with these little short-term options thinking they're going to get rich quick, man. That 1 year, 2 year deal, that makes sense.
The best way to put it is
it's really about quality over quantity.
Get rich fast, lose money fast.
Fast, right? You make it fast, you lose. You ain't never lying about that. That's true from the stock market game to the dope game, bro. It's like come good, go good. Like,
exactly.
So real.
So and that's why I always ask people, like, how is it that you want to play this game? And the thing is, people need to understand the game in which that they're signing up to play. Like that's the biggest part. Like that would be like, and like since we're keeping it within sports. It's like, you're not going to go out there and just step out there at an LA Fitness and just say, okay, hey, I've never touched a ball before, and I'm just going to go play basketball with the guys that are running up and down the court. And just think that I'm just like going to just play immaculately. No. I mean, you may get a shot every now and then that goes in, but you're probably going to travel. People are going to kick you off the court and everything else. That's just part of the stripes that you're going to learn. And in the same way, you're going to lose sometimes in this, and when it comes to trading. Like I don't like, the thing for me is like, when I see across social media where I hear about people acting like they bat 1,000, where it's like they never lose. I mean,
I can't fuck.
That's asinine to me. It's like, look, it's like honestly, even Warren Buffett has taken losses. And do you know how much percentage return Warren Buffett has brought from 1965 to 2025? 5.5 million % return versus the S&P 500 returning 39,000% return in that same time span. And even that man has taken losses within the Berkshire Hathaway portfolio. So if that's the case, he's not batting 1,000. So when I see a person saying, "Oh, I'm batting 1,000," then that automatically my mind triggers and saying, "Oh, you just got started then."
Right. You did one
God, I'm
trade
glad
and
you
one will
said
run
that,
it.
And it
Hey, got to throw that flag on
and
them,
if,
Dan.
and if they are batting 1,000, like I guess the best way to say, like for me, I've been in that process where it's like you like, when you have investment banks that want to give you extra like perks and everything else to private wealth banking, like they ask you to see your books over like a 7, 10 year or 5 year period. So
Okay.
essentially it's like, so that way it's like, there's folks in whom wish to talk, and then there's folks in whom wish that can talk with folks on the institutional side. We ain't the same.
Right. Yeah, it ain't the same. And
I like it.
speaking about that
I
10-year
like it.
portfolio, I can't remember what ticker it was, but I had one of my partners saying, "Man, this right here, I'm about to invest in this." And I was like, "Hold on." I was like, "What's the ticker?" So he gave me the ticker. I was like, "Well, I get with you when I see you." So I saw him. I said, "Well, show me the ticker you were talking about." So he showed that shit was green. But I looked at the damn chart and I said, "Bro, that's a 1-day chart." I said, "Bro, you got to look at 10-year chart." I did a 10-year. That shit went from this
At best,
to
look at
that.
it. At best, look at it
Red.
1 year. At least look at it over a 52-week standpoint.
At
Like
least.
one of the things, like since I've been in the game for so long, it's like I think that honestly nothing really surprises me anymore. From what is it that I see out there now. Of course, the market's changed, so it's like that's the part that like kind of like keeps the blood going for me. But like for example, seeing it from the people who wish I play penny stocks, from the folks who do 0-day trades, from the folks who do weeklies, your swing traders, your long-term traders, your futures traders. I mean, here's a cold stat line for you. Over 80% of those folks who do short-term trades go broke.
Damn.
Like
That's
like
worse than the Navy
like
SEALs.
majority of like a lot of your professional traders are not profitable.
Yeah. That's crazy.
So the best. So
Why are they doing it?
I mean,
He said, why they doing it?
I mean, it's like obviously like they love what they do, but then there comes this certain point where it's like, okay, hey, are you gambling or are you actually like, because the folks that, like, and the best way to put it is like if you listen to people in whom wish to actually truly have a system as it pertains to how is it that they do it. Like listen for the system.
Right.
If there's no system behind it where it's just like, okay, hey, I'm just doing this and everything else. And for me, the way that I grew up reading charts, there were no indicators. I mean, they were, but that's not how I started looking at
That's
the
not
chart.
how you came
I
up.
had to look at the chart itself without no like moving averages or none of that BS. It was just like
Right.
you had to look at the
The
chart.
Holy
and,
Cross.
No, you had to look at the chart and like literally be able to see what is the price action and the volume and the support and resistance levels telling you. That's it. And you have to discover those. And a part of that is like, hey, you might be very, very wrong. So that like that
Damn.
like I said, that's
Right.
how I came up in the game in the sense of like my journey as an investor / trader, and then becoming a full-time trader, then like literally becoming a long-term trader. Like for me, I like being a long-term trader because honestly it's like it frees up my time and now I can just go do other things.
Right. Get you. So let me ask you an important question because I know you've given us your time and I do appreciate it, but I do want to ask this especially for our people because we get so attracted to sometimes some of us get so attracted to the shiny things. We scroll and we see these elaborate thumbnails and then we listen to somebody tell you something and give you some tickers and next thing you know you're going to take your $50,000, $500,000, you're putting it in there and you're coming out broke. What is something that our community needs to legitimately consider when it comes to trying to build generational wealth? And me and Dan say it all the time. The things that we're doing now, this shit is not for us.
next.
We didn't make the right decisions because we weren't educated on the decisions to make. But now that we know we just trying to do it for going forward. So what are some of the things that, coming from an experienced person that's such as yourself and much respect to you, what would you tell our community to consider when trying to approach this thing?
Oh man, I got time today, so you're good. So
Okay.
so
I appreciate it, bro.
here's what I've learned. Like,
Okay.
when it comes to like when you look at people in whom which that you listen to, ask yourself this as you listen and as you watch them: do they own their 24 hours? Like,
damn,
do they
that's
own their do they own their 24 hours, or is that 24 hours on borrowed time? Like that's the thing that I really look at. the second thing that I look at is also in the sense that, I've never been the type of person, like, for example, even on the Come Up series, I put out tickers in which that I tell people to pay attention to, but I'm not going to be telling a person to like just go out there and buy those things, because if you go through this entire period and this is like when you start your investment journey or your trading journey, you got to do it with the standpoint of the fact that you're also trying to learn it for yourself. Because let's say, God forbid, something happened to me. Did I give you the tools so that way you can go out there and continue the journey and do it for yourself? Or will you constantly need somebody to consistently feed you? Like me, I'm a firm believer. I'm going to teach you how to fish. I'm going to teach you so that way you don't know how to starve, because I see a lot of us out here starving. And like that was the whole method and purpose for why is it that we started the entire process of doing what we did on the Come Up series, to teach people how to fish for themselves, and then that way they can go and teach other people how to fish in the process. If you have it where essentially that people and to me, I look at it in the sense that if you consistently still need me, then I failed at what is it that I've done. Like that's
a row of gems he just
like,
dropped.
honestly, like think about it. Like, you should outgrow your mentors. You should outgrow the people in whom which they teach you. You should become better than the folks in whom which they brought you in the game. That's just naturally the process. If your mentor is still doing better than you, and yet you haven't like literally exceeded what they've done, then something is wrong. Either they like didn't tell you everything that you needed to know, which means that they set you up for failure, one, or two, essentially it's like what they gave you just wasn't as much value. And I noticed that a lot of folks out here are giving people surface level data without actually going deeper into the weeds to teach them exactly like, okay, hey, what it is. Like for me, it's easy to give somebody a stock ticker. It's different to teach somebody the entire industry.
Jeez.
That's right.
Damn. Go ahead, Dan DeVille. I know you. I see your wheels turning, Dan DeVille. What you got?
I do, brother. It's spinning.
Go ahead.
It's spinning heavy.
I can tell.
So something that's real important to me is the kids.
Yep.
So as far as the community that's out here in the nation that's got children, yes, we've had our stumbles as adults, and we don't have that time that the kids have. But with the knowledge that you're giving, what piece of advice would you give for the young mothers, the young fathers out there, to put something to start going forward for that child, so when that child is of age, they can take that step further, like we was talking about.
Simple things like put cash aside. Put cash aside. Like that's the easiest thing. Put cash aside. But if you want to be even better, don't just put cash aside.
Right.
Put that money to work. Like the one thing I taught people
That's
from
right.
day one of the Come Up series is I said, treat every single dollar that you store off as an employee. Now, when that money, like, so when we think about it, like in the sense that the money that you bring in from, like, for example, your, like, your paycheck or whatever it is, a vast portion of that is going to go back out because of the fact is it pays for, keeping lights on and everything, a roof over your head. But the money that you save or the money that's left over, that's the money that now can become your employee. So now you choose as it pertains to, do you want those employees to go out into the world and work for you? So if you're a mother or if you're a father or you're a dual parent household, and you're trying to set up your children for success, having a custodial account, buying stocks as it pertains to what's important, or if you don't even have that but you're just trying to set it up for yourself to get going, because some people are like, hey, let me put the mask on myself first and then essentially take care of the next person beside me. Okay, what you could do is the profits in which that you take from your existing position, you roll those profits over, and then those profits literally jumpstart your children's account. So you have multiple
good point right there.
Multiple different ways,
right? Because I gotta ask you this, Mark, because I recently just did this, and I got my daughter custodial account some years ago, and like I told you, I had a bad taste, and I will say this, I had a bad taste in my mouth when that whole situation took place, and I think this might have been back in 2023. When I had got hit with that $20,000 that I had to pay him, and I just didn't go back into the account. Thinkorswim came, Charles Schwab, and so it was just recently my son asked me, have you been doing your stocks lately? And I said, man, I ain't really been messing with it.
Okay.
And this goes towards what Mark was saying about longevity and patience, right? So I pretty much like moved everything. It was like 5,000 in there left, and I just didn't turn it. I just didn't pay attention, bro. When I logged back in there, it was $19,000 in there from stocks just improving over time. I ain't even did shit. Just the employees that I left in there had been working.
Right.
So he's literally right when he says what he says.
Value.
So recently, what I did was I do remember you saying something. I might have deployed it wrong, so that's why I'm asking you now. And if so, I'll go back and try to correct or just learn from here. So what I did was I looked at where my gains were, I secured that, and then I got ready to move it over to the baby's account because it's all time high, so I know this shit's going down. I'm going to buy low, so then I'm going to take the profits, reinvest low, and then let that ride some odd years. So is that the correct methodical thinking, or is there something better that I should have done?
There's literally nothing wrong with that strategy. Like the only thing is like just be advised that essentially that there's no such thing as like, sometimes you may get it right as it pertains to, oh, I bought in when it was like dropped this low and then the very next day it just spiked up. Congratulations. For the average person, you're gonna probably buy in and it probably may still drop, and that's okay. I mean, because when you think about it, like you just said, when you buy stocks and you just let it, it's more so like you set it and forget it. It's like you're setting it. You're setting it, and it's like it's kind of like, okay, for the folks out there, I'm gonna remove it from sports. I'm gonna make it a little bit more real for you. This is how you're gonna find out if you how many of your viewers or listeners actually can cook. All right, so if you're thinking about things in short term, that's microwave. You can make yourself some ramen noodles out of the microwave or however you decide to do it. Then there's the stovetop ones in which that's over, let's say, a 6 to 9 month period in which or 6 months to a year period that you're looking at. It's like, okay, hey, stovetop is still good. It can even last as it pertains to leftovers. But we all know nothing beats slow cooker / oven made meals. Nothing beats it.
Facts.
And those are things in which it's going to take X amount of time. When you put something in a crock pot, like I come from back in the day when my grandmother would put all the ingredients in the crock pot, put the seasonings in there, let that thing go. By the time when we came back from school, from school, work, and everything else, all right, a few stirs, that bad boy's ready. So when you think about like something like that as it pertains to hours, think about that as it pertains to a set amount of years. Like you have a certain thesis, like in the sense of saying, okay, hey, I think that AI is probably going to have this massive flow revolution that's literally going to change the entire landscape. Now, when we think about revolutions, the start of a revolution in business takes about 3 years. In order for that revolution to fully solidify is about 5 to 10 years. So if you bought in an NVIDIA, like let's say, shout outs to 2022, when I dropped the conversation about AI, come into the conversation.
Facts.
And technically,
get that man his flowers.
Technically, I was screaming it in 2020 just to get everybody prepared. If you think about it, 2020 to 2022, that's the beginning of the revolution. Now, what you're seeing now in 2025, that's the revolution as its entirety. So if you think about it over a 5-6 year span, look at where we are.
Yeah, you did call that shot, bro.
I mean,
you did Steph Curry that shit. You did. It's just a fact. It's
did
true.
I create hip hop? No, but I was there.
But he was there. Right. His top 50 list was actually accurate compared to some of these other top 50 lists of trash. Mark was actually, and I do recall you talking about a lot of that as it was coming. It was autonomous, it was LiDAR, it was a lot of companies that were getting involved, that were going to be involved in these things that were going to be taking place. And to me, Mark can correct me if I kind of saw it off place. I always kind of saw your perspective as what's involved in making that iPhone and where can you get in with that, because they're going to need those resources, and that's where you want your money to be, because they need that to make this. And so I thought that was a phenomenal perspective on
Here's a cheat code for everybody. Like, since we're in the spirit of giving as we're going into the holiday seasons.
Right.
So when you think about it, right, like when Apple reports its earnings, if they have a bad quarter, the companies that are tied to Apple are also going to fall. Its suppliers will also fall. The stock prices for those suppliers will fall. Now, here's the crazy part. If you see that their suppliers also reported a dope quarter and their number one customer happens to be Apple, we can kind of connect the dots and see that, okay, hey, well, based upon this, okay, then production has increased because of the fact is that they're expecting customers are going to step in and buy X amount of devices, and that this is probably going to be a super cycle for this company. You could look at that across the entire board. You can name any company, and I could probably tell you exactly like how this is set up, because we're looking at it not just from an individual company, we're looking at it from a standpoint of an industry. Like, that's the part. Like, if you know the industry, then essentially it doesn't matter what company somebody rattles off. You're going to look at it as it pertains to the sector and say, okay, hey, based upon my knowledge of this sector, this is how I see it playing out.
Oh
just
man,
answered the
hold on,
question
Dan.
for the
Before
nation.
you say something, can I thank Mark real quick? I'm sincerely dead ass serious about it. Hey, Mark, I want to thank you, brother, because I never had the opportunity to talk to you face to face and thank you. I want to thank you for saving me from that Nikolai shit. Because let me tell you something. When that shit first came out, and they had that damn truck. I'm a car person, and I saw that truck. I said, that shit's dope. I'm
From
definitely
day
invested
one,
in
I
this
was
shit.
not
Now I
buying
watched
that
when he was
shit.
like, yo,
I was
listen.
not buying that shit from day
Mark
one.
was like, don't do this shit.
I literally was screaming.
Next thing I know, that came out.
I was screaming from the mountaintops, and I even had somebody like. So here's the backstory. Here's the backstory that I honestly, no, I never told anybody this. So there's two things that are actually happened. When I actually was talking about that Nikola trade, and I said exactly how trash the company was, somebody had actually reached out to me from the company and saying, hey, we'd love to have somebody that like comes and talks to you, so that way you can get a better perspective as it pertains to what we're doing. We had an hour-long call. I still didn't believe it. So I was like, okay, whatever. Then I also had somebody from Wall Street that was also interested in picking up coverage of Nikola and all this other stuff, and trying to and they were like, Mark, you're kind of tarnishing it as it pertains to and I'm like, I'm not gonna sit here and lie to people. Like, if it's trash, it's just trash, and that's ultimately what we just have to accept. And I knew from day one that essentially that anytime when you see that a CEO is making grandiose promises in a public market, and there's no type of data that backs what they say, and they just want you to just blindly believe, we lost the plot.
Facts, bro.
We lost the
Dan,
plot.
he saved me, bro. I said, man, you know what? I'm gonna listen. I know that truck look cool and shit. Then I found out that shit was made out of cardboard and didn't have an engine in it.
It was literally, you know what they did was?
brother.
They literally rolled it down a hill. They rolled it down.
Rolled that shit down here. It was a soapbox
It
car.
was. And I was just like, yo, this is just weird, because you're talking about hydrogen and everything else on a Freightliner.
Right.
Right.
I digress.
Hold on. Right. So I just wanted to thank you, bro. And that is some of the things that we have to be mindful of, as I was asking about information on how people could kind of pick and choose where your information comes from, and just kind of do some research on it. Don't take the first horse they show you, because it might be a donkey that's just put on stilts and they're not a horse. So, you know what I'm saying, man? But go ahead, Dan. I cut you off. My bad, brother. Go ahead.
Oh, no, brother. No, brother. What I was saying to you, Brother Mark, is I appreciate the way that you laid it out, because that barrier to get into the market. How do I get into the market? What do I do? These are the things that I hear from folk all the time, and you just explain to them whatever it is that you do. If they're a daycare worker, over the road truck driver, they're a mechanic, that industry that they're in, they can invest in those particular things that they see and come up, brother. And I couldn't have verbalized it better. I appreciate you telling it.
I do what I can. I got to run with the gifts in which that I have, and apparently I'm able to take complicated information and ultimately make it plain for folks.
That's right.
And I firmly believe that, honestly, that this information is easy for everybody to understand. I think the biggest thing that people just need to understand is just the simple basics as it pertains to how do companies work. If you can understand how companies work, beyond just the surface level stuff, then essentially it's like, okay, hey, you know more than like the average person does. Like that's the major part.
Right.
A lot of times when I sit back and ask people, I'm like, well, how does this company make money? Where does their revenue come from? Who is their customer? Okay, if you can tell me that, all right. All right, so what is it that they are investing into? What is the next thing that they're looking to bring up on their product roadmap, or their service roadmap? Because ultimately all companies, here's the I don't think it's really a secret, but it's ultimately something it gets hidden within language. All companies are built to scale. All companies, all big businesses always started off as something small. And when they started off small, 9 times out of 10, when they were small, they were building their moat. And their moat is ultimately the thing that got them to the publicly traded markets. Now that they're at the publicly traded markets, that moat is going to probably stay solid unless the market itself shifts. But at the same token, what they're looking at is how is it that I can improve revenue growth? How can I grow, show that I'm growing to investors? And then also like probably in the sense of keeping my expenses low. If your expenses are low and your revenue is high, then that means that your profit margins are good. If your expenses are high and yet your revenue is decent, then your profit margins suck. And if your revenue goes from $1 million to let's say $2 million, then you've got revenue growth. Now we're just talking, we're just changing the M's for the B's, and ultimately we're just having a different conversation.
Mm-hmm.
Yes, I would like to point out to people that none of this is always easier said than done, but I would also say that you got to stay committed to
You
it.
do.
You know, and Mark had talked to that. You got to stay committed because there's going to be some rough times and it's going to be some good times. And ain't no sunshine without the rain, and grass don't grow without both. So, you know, you're going to have to weather all of those, man. So,
Even a city that literally goes underwater in a hurricane can still, once when the water goes, it still grows grass. So like
facts.
that's the best way to really think about it, in the sense of you're going to run through some rough times, but anything that you've invested into, whether it's like, you know, for example, I'm married. Like I've been married for 10 years now to this amazing woman who like literally like did me a favor by saying yes. And has it been easy? Absolutely not. I look at myself and like, yo, I am not the most easiest person, but yet at the same token, it's an investment. Like we make investments in things in our lives that actually matter. And so you got to think about it in the same thing. If wealth is ultimately on your trajectory, then it's an investment. It's going to take time. It's also going to give you moments of frustration where you're going to look at it and be like, oh, I don't want to look at my portfolio today. And it's going to be it. Like, for example, 2022, imagine going from 2018 losing 18 to then losing 120 M's and like over that period of time. Like, but like you look, but see, the thing is, here's the crazy part. Most people will look at that and say, oh man, bro, you went from losing 18 million to 120 within that period, like from like that period of time. But look at the growth. I had to get there in order to be able to be in that position to make that loss.
Lose it.
Right.
Damn. Facts.
So it's a part. It's a part of the process. It's a part of the process as it pertains to getting to ultimately where you want to be. Like it's going to be uncomfortable, and also there's going to be some pain. But I think that pain is like the restitution or the residuals that you pay in order for that growth.
Right. In the military, we say pain is weakness leaving the body.
And if you don't want to have to do this on your own, look, there are a ton of solid financial advisors out there.
Mark, can you expound on the overall maybe meaningfulness or facilitation of financial? Because some people, you know, especially our community can be a little hesitant on trusting people to invest money while they just throw money away on frivolous shit. So,
Right.
you know, right.
Man.
So can you kind of maybe not anything, just a gem to maybe make them feel at ease, but just some analogies to maybe help them better understand.
Let me give everybody the basics as it pertains to of wealth management. Let me start there. I'll start in the basics of wealth management. Everything is looked at as it pertains to two things: growth and income. Those are the two main fundamentals of wealth management. And so when you think about it, they also look at it, and I'm going to break it down for everybody. So when you're 18, 21, you're not thinking about income. You're thinking about going out there and getting a job, solidifying yourself within the market, and ultimately growing your portfolio as fast as you can. You're at the age where you can take risks. When you get to like
50, that 18 years old?
18 years old.
Oh yeah, I wasn't thinking about none of that
shit. Right. But see, that's the point. Like, look, it's like, you know, think about it. At 18 years old, we probably all did a bunch of dumb shit that could potentially fuck up our careers. And we lived to tell the story.
You're right.
I think the thing is that when we think about it from a trajectory, though, when you get to like 50, 55, you're not like you're coming down off of the growth, and you're starting to see that, okay, hey, sun's getting a little low. I need to start looking at what does it look like beyond, my 9 to 5 and everything else. Am I positioned well? What does income look like for me? So when they get to like 60, 65, they're thinking more about income. They'll have a little bit of growth, but they went from 99% growth to maybe 10% growth, and the other 90% is income. And so what you have is, that's not something that you're always going to be thinking about, like you just said, because you're going to be in the midst of everything. You're going to be in the midst of the journey, the 9 to 5, having kids and be lifing and everything else. You're going to need somebody in whom which that comes from an unbiased approach that can look at the entire situation and say, okay, hey, this is where I see where my client is. This is what they need as we prepare based upon those goals that we set forth. And that's their job, to make sure that your money is prepared very well. So that way, when the main thing is not the main thing anymore, then essentially like, okay, are you prepared? Are you protected? And a lot of folks like to think that their 401ks are going to be the only thing that protects them. And in reality, 401ks are great. Don't get me wrong. 401ks are great. But you're going to need something more than that. Like, when you think about it, $1 million in 2025 is nothing. Like, that's like $1 million. Like, to put it into perspective, you have a government that is literally saying, we'll charge you $5 million for you to literally have citizenship as a person from the outside. That goes to show you how much $5 million really matters in the grand scheme of things.
Right.
So, like, if you're thinking about wealth in a whole different type of thing, riches can be taken, wealth is built. And a part of that is, I don't know anybody that made it successfully by themselves. And in the same way, when you think about your money, it's not going to be the same way. Like, you're going to need a team. Like, you're going to need a village. You're going to need a tribe of folks in whom which that are like literally looking out for your best interests. And that's why you find a fiduciary to like literally step in and do those things. Like, for me, I've always had like that as well. Don't get me wrong, I've had a lot of great financial insight. But if you got Jamie Dimon, who runs a company that controls $14 trillion worth of depositories, and he has a money team of folks that look at his capital, and this man literally like moves markets, then Raymond from down the street or anybody else like that, like.
Hey man, new acronym for Mark. I'm talking about GDM, Jim dropping ass Mark, man. Yeah, Jim dropping Mark. God damn, you dropping them shits out here like Sonic.
I mean, it's just the truth. I mean, look, like the truth is either gonna cut one of two ways. The truth is gonna cut in one way where it's gonna like make you wake up and say, okay, hey, like let me get to it, let me get going. Or to the other folks in whom which that are not in a position to listen, or they're not willing to listen, the truth is going to sound like hate to those who hate to hear the truth.
Boom, that's man.
So it's either going to be the thing. It's either going to be the thing that uplifts you and like literally like allows you to grow, or it's going to be the thing that tanks you because of the fact that you don't hear.
Let me ask you this, Brother Mark. For those that are just getting started, they're gonna jump out and go start and do something for themselves or for their family. Platforms. What's a good platform for them to start with, and something that can guide them through the journey? Because there's so many different options out here. Where's a good place to start?
I mean, there is this place called the Come Up Series on YouTube where there's like 6 years worth of content. Hell, there was even a half of a year where I even taught NBA level material, like for folks. Right. But there's this like we literally created like there's a starter pack. I'm gonna give some shout outs too. I think that there's a gentleman by the name of Wall Street Trapper who like makes it very plain and understandable for folks to understand the markets. There's also Elena Investing Bay on Twitter. She does a pretty solid.
Now, Mark, what What about platforms though? I think what Dan might be talking about, because some
Right,
people so
right,
attracted
like
to trying to get on this
Are we
Robinhood
talking about
shit.
like brokerage
Right,
platforms?
like Robinhood,
Oh,
Thinkorswim.
Yeah,
right,
okay,
yeah,
that's a whole
bro.
different type of
right,
conversation.
You definitely need
There's
to
a
hit
whole
on.
different type of conversation.
Yeah, you definitely need to hit on that shit, bro. Cause
Okay,
I try to tell
so
people
for
stay
me,
on that shit.
I think that they're all the same. I think the thing is just knowing like the language behind it. Like for example, all brokerages really work the same. If you're Robinhood and if you start in the hood, then hey, look, we all got to start somewhere. Like
Right,
it's
right.
the reason why Robinhood is done so well is because it's easy for folks to like literally get involved into the market. Now they also have a good educational platform that I don't think that a lot of people take advantage to like literally use. Um, I think that Charles Schwab is for folks in whom which that are like literally like getting into like becoming serious traders. So if you're like really on your analysis game, your technical analysis game, where you're able to read charts or you're really looking to read charts, that's huge. But I mean, the main people out there is of course your Morgan Stanleys, which is E-Trade, your Charles Schwab's, which acquired Thinkorswim. You can do your interactive brokers. I like E-Trade. That's who I started with and who I've always been with.
Yeah, you've been on E-Trade for a while. Can you elaborate on why? Because I know
mean, it was actually
I know why,
where I
because
got my
you
first
explained
stock.
it, but
So it was like my first stock came to me
Gotcha.
via E-Trade. And I kind of just stuck with it. I stuck with it ever since. I mean, I'm not like knocking any of the other platforms. It's just that that's what worked best for me. Like it was just easy.
I ain't gonna lie though, Mark, because for a minute, Mark, when you was on E-Trade and I used to watch some of your videos, I was like, damn, they got some information that I ain't seen on some of these other platforms
They
when
do.
it came to
They
looking
do.
at information and documents, bro.
Yeah.
Okay, yeah,
Yeah.
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 'Cause
They
that's
give
like,
you
that
analyst
shit ain't-
like a
it's
lot of
not like us.
Yeah, they give you analyst research reports on there so that way you can like read some of the stuff from the Morgan Stanley team, because they cover a lot of companies, and then they feed that to their institutional clients and everything else, and essentially that's ultimately like stocks are dictated to go up when they start getting picked up by coverage by investment banks and stuff like that. So, yeah, so I would say because those investment banks they give their research, they give their rating of the stock, and then essentially it gets handed over to like money managers and stuff like that, and then they deploy the capital.
Okay.
If you're looking at it as it pertains to just learning platforms, I've always been a huge fan of Bar Chart, because they give you a lot of stuff on that platform and they give it to you for free before you even go to the paid version.
True.
So I'm all about that. Also, if you don't have the money to pay for the Bloomberg terminal, you also have Koyfin, Koyfin, and it gives you a lot of the like news headlines and data that's happening within market related information. Again, free. You also have CNBC, free. So yeah, there's it's pretty dope. But I would say if you're doing brokerages, you know, really if you want to keep it simple and depending on what you're doing, you can start off with just an IRA, because it also has tax benefits for you. And then on top of that, like I think you're putting up to I think it's like $6,000 or $7,000 a year annually. And you just store away. You can
Is that a mandatory figure,
say that again.
or is that a cap?
That's
is that
a cap.
mandatory
That's
figure
a cap.
or a cap?
That's a cap. So
Cap.
like if
Gotcha.
you do lower than 7,000, then hey, it is what it is. But yeah, you can't go beyond. I think it's $7,000. But yeah, I mean, I would say like that's if you don't want to like, and those you can, and some of those you can trade out of. Others you just invest out of. Like again, it just depends upon what you're like. How is your stress level set up? If you're the type of person, and this is where it comes down to knowing yourself as a person. If you are the type of person where you're looking to gamble, then you need to sit back and ask yourself, are you willing to gamble away your future like that? Or are you in the process, are you looking to build a future? Like if you're looking to build a future, then you need to start slow in the sense of investing. Yeah, it's not going to be the most sexiest, but I'm going to let you guys in on a little secret. Being wealthy is not sexy. Getting there is not sexy. And the crazy part about it, being wealthy is like being popular. It's a job. You have to maintain it. You have to essentially go through that process. Hence the reason why riches can be made, but it can be taken. Wealth is something in which that is earned and it's built.
Damn.
So
all right, so let me get you on this real quick.
There you go.
Because you saying the IRA. You saying IRA? Yeah, definitely sip some water on that shit. You saying IRA? Now, what's going to be the difference between IRAs, high yield savings, CDs? Because
Yep.
I did get a question which I have really little education about. Somebody asked me, I said, listen, you might want to go talk to your bank because I don't know which one of those might be the best for you. But basically, they were looking for something to put the
Here's the
money in that
simplest
would give them
point.
the best
Here's the
return
simplest
over
point.
time.
You have a better chance of buying the S&P 500 than putting your money just towards a high yield savings account. Like if you're thinking about it, that like I'm gonna keep it 100. Like you guys brought me on to keep it a stack with you, so let's do it.
Hell yeah, all the way
Look,
tall.
I'm trying not to turn on my inner Kendrick and go demon Kendrick over here.
Hey,
Shit, go ahead. Dodger just won it. You know, Toronto
Listen,
mad.
the
Drake
city,
mad
the
over there.
city's
Go
up
ahead.
right now.
right.
All the way up.
So I'll say it like this. High yield savings is ultimately, and you guys have probably watched the Federal Reserve where they're saying that they're going to cut rates. So ultimately, you're going to see that you're probably going to get notices from your bank that's saying, hey, since the Fed is cutting rates, then essentially the percentage in which that you get as it pertains to an interest payment is going to come down. So it was at what, 3.75? Now it's at 3.5 or 3.25, depending on your bank. So if you're literally trying to fight for let's say 4% at best that you get, or 4.25, you have a better chance of putting your money towards the S&P 500, which annualized compounded rates is, I think it's 7% annually. 7% growth if you're over a 10-year span, 7% annually every year, which ultimately beats any high yield savings account. And so here's a little dirty secret. Since you wanted me to go inner Kendrick, most of your investment banks or your Wall Street traders out there, which allows them to keep their job is they're dictated based upon the benchmark. The benchmark is the S&P 500.
The S&P 500.
So if they don't beat the S&P 500, 9 times out of 10, they're getting a pink slip. They lost their job. Here's another crazy stat line for you. Because I also run, not only do I understand publicly traded markets, but I also understand private markets. And private markets, like for example, your hedge funds or your private equity funds or even your venture capital firms, because they're taking on more risk. Mm-hmm. But they're also looking at it in the sense of rate of return over 5 to let's say 10 or maybe even 15 years. So they're also going to be dictated based upon, can you also beat the benchmark? What's the benchmark?
The S&P 500.
So if you can't beat that, you can't beat that, then we got nothing to talk about.
Shit. There we go.
We got nothing to talk about. Like, so for example, if you're looking at it like, let's see here. I think the S&P 500, I'm gonna like for my own the man
sanity. Over there probably got swordfish. He probably got a swordfish set up. Probably walking the unilaterally 7 screens working together and shit.
Here's a cold, staggering stat line. You ready for this?
All right.
The S&P 500 this year is up 15% year to date. So if you started in January 1st and went to today, that high yield savings brought you 4% at best. The S&P 500 beat it by more than a mile at 15%.
More than a mile. I was about to say shit. I'm over in a different state.
Even if you have a down year, like, right. and here's how it also gets dictated. So, like for example, you guys have maybe heard what is called the bond market. So the bond market is ultimately in the sense of like, you know, treasuries, U.S. debt. People buy it and ultimately expect a rate of return. So, and a lot of times what people look at is like, for example, the 10-year. All right, so the 10-year means that if the 10 years at 4%, then they're saying that, okay, hey, your money sits over here, then you get a 4% interest payment. You get 4% interest, which is the yield, as it pertains to a payback. So you mean to tell me my money's going to sit here for 10 years just to only earn 4% back? Now, in some cases, when the market, like when you'll see it, like here, no crystal balls here, just data. But when we start to see this market turn, and when we start to see that the economics get worse, people are going to start asking themselves, are stocks what I really want to hold right now? And you're going to see the market drop. The market's going to go through a flush and people are going to run to cash. And those are the people that were in the market for all that period of time and they let it run up and we've got profitability. Let me take that profitability off the table. Because what did I say earlier?
Take that shit out.
You don't lose money taking profit. Right. So now they're taking money off of the table, waiting for the market to settle, waiting for the economics to also get a little bit better, and essentially now they become buyers back into the market. And all the while, the bond market kind of dictates that, because when you see that yield go up, expect equities to probably start to drop. You see how they're not like exactly what you just did.
The inverse.
Just go up,
right?
just go down.
Exactly.
Because what the market is telling you, and we also have like 1 year, 3 month, like, you know, like yields and stuff like that, treasuries. When those go up higher, so like if a 3 month is like sitting at like 5%, right? So you mean to tell me that I can put my money towards a 3 month bond, and essentially over 3 months I'll get 5% back? I might say that that's a better opportunity than buying stocks in the market. So which means I'm probably going to pull my cash from the stock market and ultimately go buy. Now, I don't want to confuse the folks out here. I'm just letting you know exactly how market dynamics work. I'm just giving you a short lesson in market dynamics. So that doesn't mean that, okay, hey, Mark, do we go out and like, do we just pull our money? No. At that point in time, this is where I say this is where you stay in tune to the market, because the rolling forest is actually set up where each quarter you're deploying capital into the market. There's 4 quarters in a year, so you deploy 4 times a year.
Correct.
So essentially, like if you see that it's a bad quarter, then it's giving you an opportunity. Sometimes you may just say, okay, hey, instead of me doing 4 times a year, I'll do 3 times a year.
Makes sense.
You just carry over, and ultimately the money that you didn't invest, you can ultimately just use that just to add into the position if it drops, just so that way you can improve your cash, your dollar cost basis. So that way, technically, if I bought like for example, if I bought Apple today at $280 and then Apple drops to $250, then my cost basis is now low. So I'll add extra cash at $250 if I'm investing in the stock, and I'll say, okay, hey, now my cost basis has come lower. So when it goes back up to 280, I'm actually already profitable, because technically it dropped by $30. So I'm up by 30.
Correct. Yeah, I got my alert set already. Got my alert set. When that thing triggered, there you go.
Listen,
I looked at that chart, looked at the last time and the gap. That's how you go. And I'm not even that savvy, but I do know, for watching Mark and just taking the basics, like, man, you look for that gap, look at the chart over time, that same time, and when this thing happened, where do some of those lows hit, and just set your alert a little bit above that. And when it trigger, don't even question it, because it might drop a little lower. But the point is, it'll drop to a point where it's not going to drop too damn far before it start. Right, where I'm comfortable and I'm going to throw it in. And like you said, profit, hey, shit, ain't nobody mad about the profit. Ain't no loss, you feel me? I definitely appreciate that. Man, Mark, listen. I want everybody that, because we're a young, growing channel, you know, me and my brother just decided, you know, we both served in the military, we both got kids, we both been through some shit in life, both lost a lot in life, people in life, and we just decided we wanted to just try to be part of putting information out for our people to kind of understand and try to grow. We just tired of talking amongst each other and wanted to talk abroad the world. And so it was really one of my, I ain't gonna lie, bro. I'm gonna just tell you like it is. It was really one of my damn bucket goat lists to like get with you, because I view you as a goat in your space. So,
thank you.
You know, for you to come on and just talk, and man, bro. No, I thank you, man, because it just you enlightened me, opened my eyes at that time. I was going through a lot of shit, bro, and so it's really a blessing to have my brother here with me and to be talking to you and you to be spreading this knowledge. So tell these people where they can come, man, to try to check you out, to always stay in tune.
Yeah.
For somebody who really cares about trying to encourage us, man.
If you want my market insights, because a lot of times I'll just drop like my thoughts on the market like very fast. You'll just follow me you can follow me. I am Mark Monroe across all social platforms. I'm not on TikTok like that. I rarely post on Instagram just as a cheat code. So I more so post my thoughts on Twitter because it's faster and I'm giving you data insights. And if you want to connect with me, I also use my LinkedIn as well. But yeah, and of course, there's a ton of content that's been created on the YouTube channel, the Come Up series. So yeah, that's been the thing for me, in the sense of, if you want to go and find the knowledge as it pertains to what is it I've given, there's over 200 videos in which you can sit back. And if you want to start off at the 10 videos, which I think is the starter playlist, everybody that I know that starts off with the starter pack playlist, they're set. They're literally set. They're I got the information I needed. Now, if you want to go further into the weeds, you can do that. But the starter pack ultimately gets you right, because it gives you all the necessary things that you need. And it is my hope that essentially that content can literally stand the test of time. With all the content that I shared, it still rings true, even though as the times change. But yeah, I guess the best way to put it is, if you do follow traders out there, I'm probably your favorite trader's favorite trader. That they don't want to admit it.
Ah, damn, probably your rapper's favorite rapper. He dropped that shit on y'all ass. There it is.
9 times out of 10,
Yo,
9 times out of
listen.
10, I probably have shared some type of gem with them in which that they've used. So,
Hey, I ain't mad. Talk your shit, bro. Talk your shit.
like, so that way you
Hey,
know,
listen,
the source of data and where it's coming from. Like, they may charge you.
There you go.
They may charge you, but mine is evergreen. So there you go.
Oh, that evergreen.
Brother, I just like
man.
to say to you, thank you again, man, for that
Yes,
time
yeah.
that you took, and really just to come to educate, man, in pure, simple, clear terms that the people can understand. They can correlate it to their life, brother. You didn't have to do that, so thank you for that. It's valuable what you're doing, and it's valuable the way that you carried and dropped off the information, brother. So just wanted to give you big ups, man. Much thanks for all you.
Thanks for having me. Thanks for having me.
Yeah, for sure. And so listen,
brother.
this is what I'm gonna do for all the viewers, because I know sometimes y'all get lazy, you get a little complacent. Mark's telling you where to go, I'm telling you where to go. I'm gonna make this shit real easy for you. In the description down below, I'm gonna put the links to the IG, to the Twitter, to the YouTube. All you gotta do is take your mouse and just go down and click.
Just click
it's
it.
Gonna port you right over there. I mean, just click it and it's gonna take you right over there.
People
to,
be acting like their
come
hands,
up.
people
It's
are
the come
acting
up
like their
series for
hands
a
are
damn
running a
reason.
marathon or something like that.
Hey, for real. Matter of fact, it ain't even gonna be second to no description. It's gonna be the first shit you see when you scroll down. Go over there, support Mark, Jolin. I'm trying to make it real easy, man, because you know how people are, oh, damn, I gotta go 5 more rotary clicks on this mouse. Nah, we ain't doing that. So we're gonna send you over there, and we're gonna take this out this way. Mark, thank you so much, brother. I'm hoping, hopefully sometime in the future we can have your time and bring you back. But as we always finish this up, my brother Dan is gonna tell you what they gotta do, brother Dan.
My brother, eat the meat, chew the fat, leave the bones. Peace
And
and
we
blessings,
out.
good people.